Okay, so welcome. Everyone should have the links. We've got about 25 VIP members, so I'm not sure where everyone is, but anyway, you can put your camera on, you can leave it off. I don't really mind. So listen, the purpose of this session is to be, I don't come with anything prepared. Literally to be able to answer anything that I can for you, to be able to help you to remove any blockages. If you've been a VIP before and not got results, how can I help? If you're a mastermind member already and not getting results, how can I help? I see that Shane has kindly made some slides for us. Let me start with these two questions which came up here. So let me just share my screen quickly. Our whole objective here is to help people get results. So that's all I'm interested in. So this is the day one Q&A. Again, I'm not giving you any financial advice. I'm going to be sharing with you my own experience. And the one thing I will say about this session is that it's unstructured. So you can ask me anything about anything, and I will try and go, and if I know the answers, I'll try and go and find the slide, but it means I'm bouncing around quite a lot to be able to answer questions. So, okay, Anonymous, I did sort of answer this already. I started investing with easy equities. Yeah, so, I mean, again, we're going to go through asset allocation. Can't quite remember if it's tomorrow or Wednesday. I think it's Wednesday. And you're going to see how important asset allocation is and how it actually sums up about 85% of your total return. So the age of 65, about 85% of your total return comes down to asset allocation. And so again, I don't want to say yes or no, but if you're with easy equities, then you're in the stock market. And my understanding of investing is that you need to be, you have to have asset allocation across different assets versus just being in one asset. So that's been my experience. The German investment, I did answer that one already. Can we talk about the cost of investment in terms of moving rands into US dollars denominated account with you? Because this has been my sticking point every time. It lowers the ROI upfront of the investment. So Mandy, it's an interesting one. I'm assuming you're talking about to do money transfer cost money. That's an interesting one. I don't really know how to answer that, and let me explain why I don't know. If you're taking a short-term view, if you're taking a 3 to 6, maybe even a 12-month view, then I think it would, I would tend to agree with you. If you're taking a 5-year view, then I don't agree with you. And the reason being is that the rand has lost on average between 5 and 6%. It's actually 6%, but I'm being conservative with 5% year on year for the last 40 years. Now, does that mean it's going to continue in a straight line graph? No, it doesn't. It goes up and down in a graph. But what becomes really, really important is that if you take that into account, the costs to move the money over become negligible in the big picture. And especially once I call it a chicken and an egg. So once you invest and your chicken lays an egg, and then that egg becomes a chicken, and then it starts to lay more eggs, effectively compound interest. So you've got investments that are getting you a return, and you're reinvesting those returns, and it's creating more value. Over time, you've got the value of compounding. And I mean, I can prove this to you on a spreadsheet if you want me to, in terms of scenario planning. So, I think we've got to be careful sometimes of what are our barriers to entry in our head and what's stopping us in terms of the process. Now, obviously, the one thing I don't know here, and again, I can't give advice on these things, but the one thing I don't know is the amount of money that you're talking about. I know Alex, as an example, is here. And Alex, you and I have chatted about this. And if you're investing $100, or a small amount of money, often, it might cost $10 or $20 to move the money overseas. And I know, Alex, you and I have chatted about that and gone, oh, well, it doesn't actually make any sense. My kind of attitude would be, if you're investing $100, it's not going to change your life. It's literally not going to change your life at all. So see it more as an investment in your education. And if it's going to cost $10 or $20 to move the money, and you're overseas, and you're starting to earn the money, and you're starting to experience what it's like to earn a passive income, it's amazing to be able to log into your Wealth Migrate account, or any account for that matter, and to see the passive income coming in. Like while you were sleeping, money got paid into your wallet. Like it's amazing. Okay. And the more that you experience that, the more that you'll find a way to start to invest more money. And so I don't know, Alex, if you've got any thoughts on this, because I know you and I debated it at length, where, you know, when it's small amounts of money, it sometimes doesn't make sense. But again, from a pure ROI, return on investment, I would actually tend to agree. But then the question is, how much is your education worth to you? And you're never going to learn by reading a book, ever. Or coming on a course, or coming to a VIP event. Like you actually have to do it.
True. I think this is a conversation that I've had so many times I've actually forgotten. It's been on everyone's lips every single time that we've had, you know, an onboarding process with the client. And there's really two ways you can see this. There's taking action and actually starting to achieve something, and that's kind of what Scott has alluded to. Is it starting to, you know, a lot of people have anxiety about getting started, or they have analysis paralysis. They say that, oh, I have to do this before I can do that, etc., etc., and they just kick the can down the road. And before you blink, and literally 2 years has gone by. And I've literally seen this, not one to one. These are conversations I had a couple of years ago, and people have still found reasons not to invest, or not to do their KYC, or not to fund their wallets. So I think that's the one thing to consider, and be very conscious of that mindset. And then the other side is the, you know, the rands and figures, you know, the sense of how much it actually costs. And then I've got two opinions on that. The one opinion is getting started and not putting a hurdle in your way. And what Scott said now makes sense, to just fund your wallet with whatever amount you have and just get going. So that's the one option. My preferred option, and this is kind of what I've kind of negotiated or spoken to most of the clients about, is set up a bank account, fund that bank account every single month with maybe 1,000 Rand or 2,000 Rand or 4,000 Rand, whatever the case might be, if you're starting out. And once that hits about $1,000, or at least 10,000 Rand, if South Africans, whatever that is equivalent to your currency. So it's just substantial. It's just close to the $1,000 mark, and then fund your wallet. Then the cost per investment ratio makes sense in my world, if you look at the rands and cents. So that's what I would say. You can get started. So don't put another hurdle in your way with $10, literally funding your wallet with $10. But again, if you're looking at the rands and cents, it makes more sense anything closer to $1,000. So yeah, that's what I've kind of spoken to people about for the last couple of years.
There's two things to add to that, Alex. The first one is that, as much as I'm a passionate South African with a South African accent, the business was started and runs out of London, and we've got investors in 78 countries. So, you know, this is not just for South Africans, it's for people from all over the world. One of the things I'm most grateful for in the mastermind is that we've got people from England, Ireland, Italy, Germany, Portugal, South Africa, Zambia, Australia, New Zealand, Swaziland. Am I missing any, Alex? But like, it's just this incredible group of people, men and women, different age groups, you know, so you got this incredible eclectic group of people to learn and grow from. And so, yeah, just, you know, when people ask us questions around the Rand or whatever, happy to answer them. But obviously we've got people from all over the world in terms of that process, you know.
Yeah, so I think just to add, I've recently spoken to a lot of investors from India as well. And it kind of, it's a very similar conversation. A lot of people have asked, okay, how does this work? What would be, you know, relevant? And to keep it global, we're pegged at the US dollar. So with that mindset, I would say $1,000 is the right answer globally. And I think the other part to that is, by being part of this ecosystem, you start thinking about currencies, you start thinking about diversification, and something that is really relevant to our, you know, our elite group, our mastermind group, is where people can give their different opinions on different countries. So you're hearing it from the horse's mouth. You're not looking at the news, or you're not reading an article. You're actually speaking directly to the people that live in those countries and experiencing those currencies. So that's just another, you know, value add effectively that we have in that like-minded group of individuals, i.e. the mastermind.
Yeah, and I think the other comment that I see there's questions coming in. So Ashton and anyone else, just chuck in any questions you got and I'll answer. Either put up your hand, and which means that we'll see the little hand thing, you can go to reaction, or type, and I'll happily answer any questions anyone has. But the other comment that I'd like to make is we actually created a thing called the starter pack. And it's quite nice because that allows you just to do it off a credit card, which actually removes your friction costs dramatically. Now, you can't do that over and over again, unfortunately. But the point is you can do it once to get started. And, we specifically did that to make it easy for people to participate. So for Mandy or anyone else, from anywhere in the world, if you've got a starter pack, you've got a starter pack. If you've got a credit card, then you can get started, in terms of that process. Okay. Ashton, how do we deal with taxes, SA, when it comes to moving money across, setting up bank accounts, accessing income via wallets, etc.? Sure, Ashton, I get asked this every time, and I wish I had a super advanced, clever question to be able to answer it. So the first thing is that we don't give tax advice for obvious reasons. And again, with investors in 78 countries, it's impossible to be able to give everyone personalized tax advice. At a mastermind level, the participants, every mastermind member meets with our family office, which is Calio, and they do give tax advice and they help you structure your portfolio to be streamlined and obviously tax efficient, and so both tax and structuring in terms of that process. If you're investing just directly on the Wealth Migrate platform, when it comes to taxes, it's no different from any other offshore investment. So you taxed as a South African citizen, you taxed on your worldwide income. So you move the money across, you use the Reserve Bank allowance. So you've got R1 million that you can use as part of your discretionary allowance. And I think it's 10 million every year. As long as your tax affairs are in order per person in your family, you can move 10 million. So we don't do it again ourselves, but we've got partners that we work with that can help you move that money. I would recommend using a currency broker rather than just your bank, because you get far better rates and they specialize in being able to help you. And effectively, they would help you move the money. You don't have to set up bank accounts. So again, if you go back to Wealth Migrate, we've been doing this for so long. I got so irritated with, in America, we helped about 400 people buy houses. And we had to keep setting up, we set up companies. We had to keep setting up bank accounts because the bank accounts kept getting closed. So what we do here is we integrated with Lemonway, which is the biggest digital wallet provider in Europe. They've got about 8 million wallets. And what happens on the Wealth Migrate platform is you automatically open a wallet. So you go through KYC, which is know your client, and you effectively set yourself up in terms of your own wallet. So you actually don't need to go and do, set up an international account, because you've got it all here, and you can withdraw your cash. You're in complete control of your cash. You can deposit cash into your wallet. And you can see here, you can even have, someone asked yesterday on the Wealth Hackers, you can have different profiles. So I've got my personal name, plus I've got an offshore structure. And you can basically see your wallet. And I don't keep a lot of money in my wallet because I reinvest it in deals as quick as I can. But then you can see my wallet, you can see it, interest being received and dividends and distributions and everything in my wallet. So it's just like any bank account. And I can pull a statement in terms of everything that's happening. So yeah, I don't know if, Ashton, if that answers your question in terms of how to do it. And then set accessing income via the wallet. So again, any income or your equity is then paid back in your wallet. You're in complete control of your cash. I will go through the structure. I can't remember if it's tomorrow or the day after in terms of how that actually works. But the point being is that, and I can probably find it for you now quickly if I look, just to show you while we're talking. Just give me 2 seconds. So, but in simple terms, everything gets put back in your wallet. You're in complete control of your wallet, which I know as an investor is certainly something I like. And then you can use that money. You can either reinvest it in new deals, or you can take it out and go on holiday to Disney World, whatever you want. Fern is asking, is that similar to a Wise account? It is slightly different, Fern. So Wise is a bank account. We use Wise basically both at a personal level and at a business level. So we've got Wise business accounts. So Wise is a proper bank. Lemonway is a digital wallet provider, which means that it provides you the ability to invest in deals, etc. But they are slightly different. So what a lot of our investors do is they set up a Wise account, and then from their Wise account, they move money to the Lemonway wallet, and they invest in deals. They get all their distributions and their equity and whatever into the back into the Lemonway wallet. And then if they want to spend the money, they send it back to their Wise account. Please jump in, Alex, if there's anything you want to add. I'm just looking for that slide that shows how it works visually.
Yeah, I think just while you're doing that, I think the simplest way that I've always explained it was that within the Wealth Migrate platform, that ecosystem, yeah, that's the easiest slide, but really it's a bank account, or it's a transactional wallet in the Wealth Migrate ecosystem that is not accruing any fees or interest. So while the funds are in your wallet on the platform, you know, the reason why we've created that was for people to use that as call it a in-between account, so that you don't have to bring your money back all the way to your account and then have to refund it into a deal. It's really seamless. So once the distributions are paid from all of the investments, that goes back into the wallet. You can then from that wallet reinvest immediately on the platform, valid that obviously your KYC and stuff is in order that you would have done before you got your wallet, obviously. And then from there, what Scott was referencing earlier was, if you would like to realize it, i.e. actually get access to it to go buy a new TV or go to Disney World, you would withdraw it out of that ecosystem and into your Wise.
Let me show, Alex, let me show this visually quickly, because what you're talking about is what I'm about to show. So let's just use, this could be any bank account. And Fern asked about the Wise bank account. This could be your Wise bank account. Then you've got so the orange box is the Wealth Migrate ecosystem. So each one of us has our own wallet. Okay, and I've shown you how that works. Then you've got the marketplace. So that's Wealth Migrate, the marketplace. We then put a deal up. It might be for now the German deal as an example. So you've got the German deal on the platform. We then, all of us investors come together. So to do the German deal, just to put in perspective, the minimum investment in the German deal is 250,000 euros. They only deal with family offices and highly sophisticated investors and institutions. So the minimum charge is 250,000 euros. Now, even if you've got 250,000 euros, we've had people invest $1 million or euros in deals. That's not saying people don't participate, but there's actually far more power in aggregation. So you bring people together. It's the power of investing together as an institution. So we aggregate it. We put it in a tax efficient SPV, so a special purpose vehicle. So back to Ashton's question, we've spent a lot of money and a lot of time trying to make it as tax efficient as possible at source, whether you're investing in Europe or England or America or Australia. And then finally, you've got the deal ownership. So someone actually asked me in one of the questions in the Zoom in the previous session was, what happens if Wealth Migrate disappears? Well, there's nothing. There's no risk, because the investor is investing directly in the deal. So if we were to disappear, yeah, there'll be hassle. There will be hassle because you won't have the fancy platform to help you manage it. But the point is, you won't lose your money because you're still invested directly in the deal. What happens then is that the deal has a deal wallet. So all of the money goes into the deal wallet. And then when the deal pays money, whether it's distributions or the return of capital or anything, then that money goes from the deal wallet back into the investor wallet. And then that can go back to your bank account. So pretty much exactly what you were just explaining there, Alex. I just wanted to visually represent it. So it's a full kind of system. So it starts with your bank account. You send your money to your wallet. You invest in a deal. This is how the deal is managed. When the deal pays a distribution, it comes into the deal wallet, which goes directly into the investor's wallet. And then, if you want to, you can put it back in your bank account, or you can, what I do is I keep reinvesting in new deals. So I keep building momentum on my investments. Sometimes I take it out. I went to the Rugby World Cup last year. I took some money out to enjoy that. Okay. Hope that helped, Ashton and others. Yeah, so again, Ashton, there's 3 ways to answer a question around a tax event. The most important one, as I understand it, is when you bring in the income back into South Africa, there'd be a tax event on that. The majority of investors, 95% plus, don't bring the money back into South Africa. They reinvest it over and over again, and or they set up a wise bank account, like Fern said, and they keep the money offshore, remembering that they legally moved the money offshore to start off with. There is obviously, you are taxed on your worldwide income and your worldwide earnings. So it depends on how you set that structure up as to how that gets declared. And again, at a mastermind level, we actually help people make sure they've got that right. We do have advisors that we can kind of recommend, but obviously people do that in their individual capacity because everyone's tax is personalized and different. But yeah, primarily the biggest tax event is when you bring the money back into the country. Okay, so now I want to understand from people if there's any other questions, any blocks, anyone that, you know, I saw a couple of people that this is their second time or, you know, maybe even their third time. And if you haven't got started yet, why? What can I do to help you unblock and get you going in terms of that process? So, you know, for me, it becomes really, really important to help people get results. That's my number one objective, is getting people results. So if you don't want to speak, then just type. If you want to speak, then put your hand up. Stain is asking, must I invest in my personal name or can I invest in my company name? So again, Stain, you can, if I show you here, back to my profile, you can invest in different profiles. So that's my personal name and my company. But what's important is to make sure it's your offshore company. So if you, with a name like Stain, I'm going to assume you live in South Africa. If I'm wrong, tell me otherwise. But it's, you've got to be careful with a South African company or a South African trust to invest overseas, remembering that you're going to externalize your money legally. And if your money is owned by a South African company or South African trust, it does create a lot of problems. In fact, a South African trust, I think, is illegal. Alex, tell me if I'm right or wrong, but a South African company is doable but not recommended. Is that right, or is it not doable at all?
Yeah, so not doable at all. A South African Pty or trust, unfortunately, it cannot own offshore assets cross-border. So it'll have to be a trust outside of the South African borders in this example.
Yeah. So I think one of the things that's quite important here, I did actually ask the family office guys this question, and they reckon that, you know, to set up a proper structure offshore, you know, you need to be playing in the realms of about $2 million in terms of the process to kind of make it efficient long term. In the short term, if you're not playing in that realm, there's still ways, which again, back at the mastermind level, there's still ways to do it, you know, effectively. But there's no harm in doing it in your own name to get going, basically. And I mean, you can see on my profile, I've got it in my own name and I've got an offshore structure. You know, a lot of people, there was a lady, and I'm sure some people have heard me tell the story before, but there was a lady in about 2019 that Alex and I met. And she said to me, oh, you know, I got my inheritance in about 2014 and I got 20 million Rand. I think it was about 20 million Rand inheritance. But I've done nothing because I don't know what structure to put it in and I'm worried about tax. And I was like, you could have done anything. Like the Rand is more than halved in the time that you've sat on your hands with analysis paralysis. And so I tend to say to people, you know, be very, very careful of kind of overthinking things in terms of the, you know, what you should do from a structure perspective. By the same token, you've also got to be careful because if you go to any typical financial advisor, they're going to stick you in a box. It might be the Mauritian box, it might be the Seychelles box, it might be the Isle of Man box, it might be the BVI box. And they tend to say, this is the structure. And then once they've set the structure up, which costs thousands of dollars and is generally a lot more expensive than they originally quoted you, then you can only buy investments that are part of their structure. And it's part of their little plan. Because once you've got the structure, you can only buy their deals, basically. It's basically, you know, that's just the way it works. So again, one of the things I love about what we've got with Calio, who's the family office we work with at a mastermind level, is they help you build a bespoke structure for you and your family. So it's not a box. You're not being given a box. You're building something for yourself and what works for you and what your long-term aspirations are. Because that becomes really important. You know, there's a gentleman I know that set up a structure in the Seychelles and then moved to Portugal. And according to the EU, Portugal is on the, you know, the blacklist. And now all of his investments are in Portugal and he can't get it out. Like he can't get the money in, sorry, all of his investments are in the Seychelles and he can't get his money out. He can't get his money to Portugal because it's deemed as, you know, a dodgy area. So, you know, these things become really, really important in terms of what is your bespoke personal strategy? Where do you want to live? How are you going to do it? You know, that type of thing. Now, again, can we give that type of financial advice and structuring to everyone individually? No, it's not possible, which is why we created the mastermind to help people that kind of want to take their thing to a different level from a tax and structuring and a whole bunch of other things, which is why we work with the family office. I'm not an expert. I'm not going to sit here and try and sound like an expert when it comes to tax and structuring. I have done it 4 times myself, so I can tell you what not to do. I've set up a structure in the BVI. I've set up one in Seychelles. I've done one in Malta and one in Gibraltar. Actually, I've done it 5 times and one in the Netherlands. Yeah, and consistently had the wool pulled over my eyes, expenses through the roof, no results. Yeah, it's been a horrible experience, tax and structuring. So yeah, it's one of the things why with the mastermind, when we created the mastermind, we went to Calio because we were like, we don't know how to do this. All the kind of expert companies that we've recommended, quite frankly, have let our clients down. Can you do it for us in a bespoke way? I don't know how I went down that little paradigm, but anyway, it was me off on a tangent. Okay, what other? I'm not seeing any blockages. Come on, we're here today with day 1, which is all about your why, and your why is the bigger picture. So, like, you know, back to Michael's story. Michael was very clear. His why was his 2 daughters, and he wanted to have the freedom to, you know, where his daughters could go to university, where they could work, where they could live. I'll never forget it. I mean, Micheline said she was, you know, on that buyer's trip as well. You know, I can remember these important moments and even where we were standing, and without going into too much detail, like we were literally at a bar in Memphis. And I can literally remember Michael coming up and asking me this question. And I always found it fascinating because not only was he completely clear on the outcome he wanted, but he was even clear on the number he wanted. Like, I'm not going to share it because it's personal, but I know exactly the number he wanted. And he did it. It took him 10 years and he achieved it. And now they're living in England. And why I tell you that story, and you've met him already on in the recording, was that, you know, when you get clear on your why, everything else becomes possible. I don't know if you've watched the TED Talk by Simon Sinek on the power of why. And everyone always wants the how and the what. But when you get clear on your why, then you can power through to get the results. And, you know, that's why I'm asking, you know, are you clear on your why? And if not, what's blocking you? You know, what are the blockages? Because, you know, there's no point in turning up here challenge after challenge or VIP after VIP and not making measurable progress. And by the way, I do have some people in the mastermind. I had someone last week where they do their one-to-one with me. So if you're part of the mastermind, your very first, there's 5 steps. And your first step is you do a one-to-one with me. And we get very clear on your outcome. So I'm a big believer in simplicity's power. So we get clear on your top 3 outcomes and your top 3 measures. And I had a gentleman that did it with me in about July last year. And anyway, I had a meeting with him now, like in the last month, I think it was in April. And I read him his outcomes. I was like, this was your outcome and this was your measure. Have you done it? No. This was your outcome. This was your measure. Have you done it? No. This was your outcome. This was your measure. Have you done it? No. I was like, well, dude, like nothing's going to change unless you actually start to execute. Like if you could keep doing what you've always done, it ain't going to change. And that's both the pro and the con of accountability. You can call it the carrot or the stick. A lot of us want things, but we don't actually put aside the time to do it. And I mean, this gentleman's name was Peter. And I explained it to him. I was like, Peter, you got to do something different. And he's a high-powered business person. He's very, very busy. And he was like, yeah, but I can't join the mastermind. I'm too busy. And I was like, well, dude, you came to me nearly a year ago. This is what you wanted for you and your family. It's a year later. You've achieved nothing towards that process. Unless something changes, I can guarantee you that 5 or 10 years from now, we're going to be having this kind of conversation. Does that make sense? So yeah, I find, that stuff becomes really important where, you've got to put aside the time to do it. And it is interesting, actually, probably one of the biggest reasons that people hold themselves back from the mastermind is they say, well, I don't have the time. And I'm like, well, if you don't have 3 to 4 hours a month to get to where you want to be in terms of being a global citizen, globally diversified passive income, generational wealth for your family. Like if you don't have 3 to 4 hours a month, I guarantee you it'll never happen. I know that's a strong statement, but can you understand why I say that? Because if you literally cannot put aside 3 to 4 hours a month to achieve what you want in 10 years, it's never going to happen. Because it ain't just going to happen passively. And again, my point being is maybe I'm wrong, but then it would have happened already. It would have just magically happened over the last 10 years. So like, I know I'm being quite direct here, but it takes a real commitment. And then obviously a plan to be able to execute on that. Okay. What else is blocking people or stopping people, or, what other questions do you have? Today we went through the 10 different people or companies that, most people follow in terms of that diversification. Did that make sense? Did you understand the results that they've achieved? And again, you'll notice I didn't do it over 1 or 2 or 3 or even 5 years. I did it over 20 and 25-year periods. In Ray Dalio's case, 40 years. Because I think long-term trends are what's important. I learned this from Dr. Hannes Dreyer. Anyone can do good results in 1 or 2 or 3 years. But what are the long-term trends? How did they perform over the highs and the lows? Fern said here, I think the fear of starting, scared of failure. Fern, let me help you out. You are going to fail. So, and the metaphor I like to use is we all learn to walk. And none of you, not a single one of you, the first time you stood up and walked perfectly and could walk. Like you stood up, fell over, stood up, fell over, stood up, fell over. And the beauty of it is that you might have had a brother, a mother, a father, a sister, whatever, that was there holding your hands, making it a bit easier. So if you try to do it all on your own, you will learn over time and you will make mistakes. If you do it through partnership, I love the metaphor of us learning to walk. It's just imagine like you got that brother, sister, mother, father, like holding you and helping you learn to walk. But the feeling of whether you will or won't fail, you will fail. You will make mistakes. If you think you're going to invest for the next 10, 20, 30 years and never make a mistake, and by the way, that includes Wealth Migrate, we also make mistakes. Because if I sat here and I said every investment was 100% guaranteed, I'd either be lying, cheating, or stealing. I said that earlier already today. There's absolutely no ways that we can get it right 100%. I'll give you a couple of examples of that. And by the way, if you want me to, I'll share a video in the VIP group. I literally did it on Friday of a lesson I've learned. Actually, I'm not going to share it today because I am going to share it over the next couple of days about the lessons I've learned and the mistakes I've made. But I'll give you an example. We invested in an Australian deal and, I thought it was a great deal. I invested my own personal money. Our company invested about 400,000 Australian dollars, which is about 350,000 US dollars, which in today's money is about 7 million Rand. Just to put in perspective, it's not a small chunk of change. And we were supposed to get about 28% return and it all sounded wonderful. Well, the end of that story is it's a $5 million hole in Australia, 4-story hole in Australia right now. It's a shit show. Okay. And I'm swearing on purpose because there's no other way to describe it. And actually it's due to transfer, today's the 6th. It's due to transfer on the 8th, which is Wednesday. And I'm holding thumbs that finally a local investor is going to come in, a local developer, and hopefully, find some sort of resolution there. And I'm going to go into all the details of that in days to come when we get to partners, and I'll explain what works and what doesn't. Medical buildings. We thought medical buildings were the bomb. I mean, I've stood on stage for 10 years telling people that medical is one of the best investments you could make. And then COVID came, and no one saw COVID, so I don't care who you are, no one saw that coming. And my brother's an anaesthetist, and what happened was that all of the elective surgeries, so say, for example, I've got an elbow injury or a knee injury or something, all of that stopped. All that they did was ICU. And so all of the people that support the hospital, so we don't buy the main hospital, we buy the buildings around the hospital. And all the people that support, the radiologists, the physios, all of the support people suddenly had no business because they don't do ICU. They do all the elective surgeries. Like those hospitals and medical buildings are basically, it's the elective surgeries that make the money. And so, literally all of these portfolios stopped paying income. And so medical, the darling of the asset class world, suddenly in COVID stopped paying. So that's the second story. Does it make medical a bad investment? No, it doesn't. But it taught me a bloody good lesson that no investment is perfect. No one saw COVID coming. I'll give you another example. Alex and I, from 2019, started investing in aged care homes in England. Again, we were getting about a 10% return in pounds, very good by English standards. It was a solid structure. It was interesting because your landlord, or not your landlord, sorry, your tenant was the government. Okay, so the whole NHS and whatever, it's brilliant. You're not even dealing in the private market, you're dealing with governments. It's actually local council, to put it specifically. And there was so much demand that they couldn't keep up with supply. So they were literally trying to roll these things out as fast as they could because the local council needed more demand for aged care, for old people, because England, as Clem Santa says, is like, put a roof on it and it's an old age home. And in simple terms, so again, and I remember Alex, the partners came out and we did a road show and people met them and we all invested. And then COVID came and more than 50% of people in aged care facilities died. It's not nice to have this conversation, but it's fact. So now your mom and dad are living in an aged care facility. You don't want them to be there. They've got a far higher risk of death. So you take them out and you keep them at your house. And so what happens to supply and demand? Simple economics. Suddenly supply is the same. It doesn't change. But demand goes from here to here. It literally craters. And now you've got these aged care homes where the costs are the same. You still have to employ all the same amount of nurses and staff and all that cost, but your demand has dropped. Now, remember, the local council is only there the demand is only based on the number of people in the area that need aged care. And so these businesses went out of business. They literally got liquidated because their costs were here and their income was here and they couldn't keep it. I'm just giving you 3 different examples of 3 big mistakes or lessons that I've learned over the last 10 years even. And the only reason I tell these stories, and don't get me wrong, there's plenty of success stories as well, but I tell these stories because it's important. You're not going to get it right. Your fear of getting it wrong is a real fear. It's going to happen. I personally am invested in the Kensington Australian deal, in the medical deals, and in the aged care facilities. All 3 of them I'm in. Okay, let's go to Alex. Are you still here? I know you've got a bounce. Do you want some final words before you go?
No, I think, Scott, I think there's 2 things that I'll add. One, great session. I think you've really added a lot of context around first day, so well done. The second thing is a lot of people join us on the first day, join VIP, and write stuff down on their piece of paper next to them, or start their strategy sheet, that one piece of paper that we asked everyone to fill out. and then everyone's like, tomorrow morning, life happens and we see a massive drop off. I would urge anyone that needs support just to reach out to us. I mean, send us an email, send us a WhatsApp. The community's there. Let's try and keep as many of the dabblers and the stressors online and really make a difference. We're here to really, shake the tree or really break the patterns of your life. Really, we want you to actually think a lot more high quality thinking, what's possible, than actually just sticking to the usual patterns of joining us and then not taking action. So however we can support, and everyone's got my details to book a meeting with me, let me know. And yeah, let's see how we can get you guys some results.
Alex, as you said, you came up with it. You want, because I mean, you and I laugh every time someone's like, oh, I saw you talk 10 years ago. And what did you say? You want to change it from, I wish I'd taken action, to I'm glad I'd taken action, or something like that. I can't remember exactly.
Yeah, I think it's actually quite funny, funny/sad. But I wish I've been investing with you for 10 years then. Yeah, so I wish I was investing to, I have been investing with you for the last 10 years. So yeah, if that's with us or if that's with someone else, let's just kind of get you guys results, do something. And that will be my closing comment.
Awesome. Okay, Alex, good luck, man.
Cool.
Lazarus said, if I invest $1,000 into the German deal, after how long will I start seeing dividends income come into my account? So deals are different, Lazarus, but this one pays every 6 months, so it's biannual. It's due to close in June, so I would say realistically at the end of the year, you'd get your first dividend distribution. It's a 5-year investment, so you'd be getting your dividend distributions at the end of the year, in the middle of the year, end of the year, middle of the year, for 5 years, and then at the end, the building will be sold. You'll get your capital back plus your capital growth in terms of that process. What is nice is we've got an annual calculator. It's too complicated to do it, monthly. But if you go to the calculator here, you can actually see, so to answer your question, if I invest to 1,000, you can actually see here, the green is money in your pocket, so you can see each year what would happen. You can see the capital, the return of capital plus the capital growth, and you can see the total return that you're getting, the cash on cash return plus the IRR. So you're putting in $1,000 and you're getting out $2,000, over 5 years. Okay. So yeah, and again, you can go to any, but the different deals are different. This one that, where's it gone now? This one here that we've just done, the South Bend deal, actually paid monthly. This Air Baggett deal also pays monthly. This Manhattan deal pays quarterly. So I'm just giving you an example, but generally on average, you're looking at quarterly as the kind of the average. Okay, Corolla. I find it difficult to compare the different opportunities in the marketplace because I don't yet understand what various figures, percentages actually mean. What's more important? I haven't wanted to ask because I haven't yet gone through the course, which probably explains all that. But Corolla, I get asked this in every VIP session, so firstly, don't stress at all. Maybe Shane, if you wouldn't mind, we can share that video on the difference between cash on cash yield and IRR. But what Corolla is asking, I assume, is when you look at the different investments here, how do you choose between the different investments? So if you go here, you can actually see, so 16% IRR, internal rate of return, is the total return. So that's the capital growth plus the income. Whereas the cash on cash is just the income. So it's the income you're getting paid. So you're getting a 7% return, or 6.99 if you want the exact number, return in euro, which is a very solid return in euro. And then you're getting a 16% average return per year, which means you're getting a capital growth of 9%. So if you look at it in simple maths, if that's 16% and you're getting 7% in income, 16 minus 7 is 9. So you're getting about 9% a year capital growth, and you're getting 7% a year income. And then the other number that's important is the investment term. So you can see this is a 5-year term. which means you're investing and it's going to take 5 years for the investment. So, Carola, what's important is that some people then ask and they say, well, what's a yield? And there's a whole bunch of terms in financial lingo, yields and cap rates and everything else. But for us, we believe that, again, different people have different needs. But in simple terms, I believe the most important thing is the income. Like, what is the income that is being paid in your pocket? Because it's the income that's going to give you the freedom. And then you've got the capital growth. Obviously, you want your capital to be growing, but it's the income that's going to give you the freedom. Does that make sense? So like a very popular deal we did at Christmas time was this Manhattan deal. And you can see that the income here was 11% in dollars. But it had no capital growth. It was purely income. And it was a 1-year deal. We're going to talk about different asset classes. Keep forgetting whether it's tomorrow or Wednesday, but anyway, over the next 2 days. I hope that helps. Let me know if it does or doesn't. Johannes, I've done well and lost all and had to save cash for parents. My mistake was hidden agendas of partners. Now I am 100% with you about partners. I'm on the learning phase at present with you, and as soon as money is available, I invest. Yeah, so Johannes, I think the key to your story and to my own learning lesson is also alignment. So what I mean by that is that, if I invest, we're going to go into partners on Thursday, but for me, there's 3 key principles. 1 is, have they got 10 years plus experience? 2 is, are they niche focused? And 3 is, do they have their own money tied into the deal? So if I give those 3 stories I just spoke of earlier, in the Australian deal, the partner didn't have his money, or any significant money in the deal, and so he's run away. So now me and 82 investors have a $5 million hole in Australia we're trying to fix. The aged care facilities, in hindsight, they didn't have real money in the deal. And so when the shit hit the fan, and I'm sorry to be crude, but it happens, COVID happened, they ran away. Versus a kind of a sophisticated business that finds a way to find a solution. And so for me, to answer Johannes, is that for me, it's always about alignment. Like, what's the long-term picture? Another example, in Australia, we're with the Feltman Group. They've been around for 43 years. They've got $3 billion under management. And we've got 2 deals with them. One of them is working perfectly. One of them is not. And the reason being, they had a 2-year fix on interest rates. And then after 2 years, the interest rate went to variable. And because interest rates have risen so much, it's created a problem with the property. And so they've had to do a capital call on that deal. But what's interesting is that there's $20 million worth of equity in the deal. It's a $70 million deal. And they've got about $7 million themselves in the deal. So they didn't run away. They came to us with solutions. They was like, this is what we do. This is how we protect the capital. This is how we go forward. Because they've got their own money in the deal. And I think, for me, that's probably the biggest word I can give anyone when it comes to choosing partners is, are you aligned? Okay, hi Scott. To who do I talk to structure an income of, say, 200 to 500 a month? So Albertus, we're going to, over the next, I think on Friday, we're going to create the wealth plan. And what you're looking to do is, put a wealth plan together so that you can earn $200 to $500 a month. And that's exactly why you're here in terms of that process. So that'll help you. And once you've got the plan, then it's about the execution of the plan. So yeah, I would recommend, let's give it a couple of days, and then by Friday you should have a plan. Okay. Anything else I can help people with? I have nowhere to go, but I'm conscious we've hit midday. I know people have lives to live. Anything else I can help with? Anything else? I'm happy to help with literally anything. But equally, I'm conscious of the fact that people have have their lives to go back to. No? Happy? Yes? No? Ready for tomorrow? Okay. Well, listen, I'm going to stop sharing then. And I think one of the things that, you know, I would ask you is try tonight. I want to remind you of two things. One is one of the greatest assets, and I know I said this in the previous session, but I want to repeat it, is where I try and take all this information and I try to synthesize it into a few things. So like it's, for me personally, what I do is I synthesize it and then I actually make a video and I share it with the community. I'm not saying you got a community but you do have a Facebook group that you can go and just say, hey, these are my top 3 takeaways. Because I promise you, by doing that, like literally sit for 10 to 20 minutes now, and you know, or later, maybe you're busy now and you do it later. But if you get clear on like what your top 3 takeaways were, it has such a material impact for you because it takes all of this complexity and it simplifies it. So I'd highly, highly, highly recommend you do that. And then secondly, you're part of the VIP, you know, try and think about whatever questions you might want to know so that you're not kind of sitting here on the spot going, oh, I'm not sure, like I've got a question. And write them down, or even put them in the VIP WhatsApp group. You know, the VIP WhatsApp group is dual direction, as I understand it. I think it is.
Yes, it is.
Yeah, it is. Yeah. So, you know, even put questions in here if you want, you know, in this VIP group. And then Shane and I won't answer them in the VIP, you know, we won't answer them on WhatsApp, but we'll then put them in the PowerPoint so that you can you get the most. Because our objective over the next 5 days is to remove any doubts you got, any questions you've got, you know, to give you the knowledge, to make you feel empowered, to leave with a plan. So I'm asking you nicely to use it, like, you know, like take advantage. Does that make sense? Okay. Let me just check here quickly. Dawn said, thanks for the honesty. It's appreciated. Thanks for the offer to help and support, Alex. Look forward to getting my KYC sorted. Perfect. Corolla, I'll do some homework and see what else is puzzling. Much appreciated. Perfect. Okay, ladies and gentlemen. Well, thank you very much for all your time. I look forward to seeing you tomorrow. And just remember that any great journey, we still got a long way to go. Eh? Like we've only just started. So, but if you're feeling overwhelmed or you think it's too much, don't worry about it. Remember what I said to you. I'm consciously trying to make you realize that you're consciously incompetent. That's my job right now. So, but we'll solve it over the next couple of days. Is that fair? Okay. Cheers, everyone. Have a lovely day. Bye then.